today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the May 19th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means you and I can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much, much more important than that, during this next 16 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in, 877-927-6648. If you can't dial in, we've got you covered there, too. You can always send me an email, steve@tfnn.com. And inside our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Les Show. Right now, we've got a mixed bag out here. The Dow and S&P are down. S&P is up nearly 2 points. The Dow 89, NASDAQ 100 up 61, semis are up 25, Wall Street 5,000 is up 18, trannies are up 48, NASDAQ Composite is up 52, spot volatility down 42 cents, trading out at 28.88, gold is up $11, trading at 17.45, silver 42 cents, trading out at 17.89, light sweet crude is back 6 pennies, natural gas is up 4 cents, 30-year treasury is up half a point, 16.30 seconds out there, lead the charge dollar-wise to the upside. It is the amazing one, Amazon up $48. That's 2%. Mercado Libre up 25. Booking Holdings up 20. AutoZone up 22. And Chipotle up 17. To the downside, Dexcom off 12.50 and 12.50. BlackRock down 11.44, Carvana off $8, West Pharmaceuticals off 7, Equinix down about 6 buckaroonies. So let's just begin by taking a look at what's going on, the daily activity, what's going on, and it's really a short-term time frame chart. So let me switch over to those just so you can understand where today's key levels of support and resistance are at. So let's begin by taking a look at the ES Mini out here. We're going to put up the 30-minute time frame chart. We did see the ES Mini trade lower today, especially as we're coming into the open. Where was it trading into? You got it. Trading right back into that breakout support level. That was 29.3575. That was courtesy of the TD9 count top. Now, this didn't form a TD9 count top. It formed a Rhodes Momentum Indicator top at about 3:34 o'clock this morning. Push price right down to that breakout level of 29.3575. So nothing broken just yet. If we do see a couple of closes on a 30-minute basis below 29.3575, says you should anticipate the ES Mini to head lower. How much lower? Well, there's an A to B equals CD pattern, one that we could draw in here. So let's go take a look at what that would look like. I'm not saying this is not the pattern right now. This is only the pattern if you see two closes below 29.3575. Next, going to give you a 1-to-1, a 1-to-1.272, and a 1-to-1.618. I would say it's more likely the 1-to-1.272 and 618. First, because right now we're only looking at about 56% retracement, and then second, we can see the breakout level, the next breakout level on the 30-minute time frame at 28.86. Folks, if you're trading without the nines out here and you're trying to interpret what the market is doing as it's pulling back, you are trading with a lack of really important information out there. Please learn the nines. Just go subscribe to Mastering Probability. Just do it for at least 30 days or less than 30 days out there so that you can implement this tool. because I know that there's folks that all of a sudden see that the futures are trading lower. Take a look at the Dow, or this is the index, the NQ out here. What was the NQ doing? Well, made its Rhodes momentum indicator top. What did it do this morning towards the 6, 7 o'clock time frame? Pulls back and tests support, 9,300.25 out here. Many people might have thought, hey, guess what? The market's getting ready to fall apart. Give me a break. It's not getting ready to fall apart when on a short-term time frame, all that it's doing is pulling back to test out where it had broken out before. And without the nines, you don't know where, you don't have an objective measure of being able to identify where price had recently broke out. Here's the Dow. The Dow equity future contract, you can see traded down into one level of 24,421, and there was a second breakout area just below that at 24,376. So there's your cluster, so to speak, out there, but you can see that nothing broken inside of the Dow equity future contract. Not yet. Not as of 1:11 in the afternoon. You and I cannot, we don't control what the market does next. So therefore, since we can't control the market, let's control what we can control. Understanding where price is breaking out and breaking down and just using those easy things. Now, look, I also would recommend that you go ahead and take a look at the TAS market profiles out there. But in lieu of that, and not having that, and I can understand, you got to pay a monthly fee to be able to get that. And there's other profiles that on your systems you may be able to access out there, but see if they work, see how well they work. Take a look at the Russell 2000. Now, the Russell 2000 forming a Rhodes momentum indicator top. It's a 30-minute time frame that we're looking at out here, but price was only able to push its way down to the bottom of its TAS market profile support. So here we've got our market profiles. Price needs to close below 1317.80. That's the current profile out here, to then suggest they pull back into the 1271 area. That is where it most recently broke out. So I hate to be boring out here. I know you'd like a whole heck of a lot more information, but really the eyes need to be on those four charts for their 30-minute time frames in order to be able to analyze what the market is likely to do next out here. Now, we can go take a look at other time frame charts, or we can just all go out to the beach. They're not going to arrest you here if you hang out on the beach. Now, don't tell anybody out there. I think that's a little secret. I think that the mayors and the governor and everybody, they want you to know that they're not going to let you go ahead and sunbathe on the beach. But firsthand knowledge is always the best, isn't it? They're not arresting anybody. It's not their best of days, but it's not the worst of days. Hey, no lightning storm like we had yesterday. Okay, so that was the 30-minute time frame. At least this way you have a feel for what the market is doing, why it's doing it, why did price push lower earlier, and why did it bounce off of that level or the levels that it did. And it's really just simply right in front of us. Now, let's go from the 30-minute time frame. Let's go jump into the fire. Let's go to the daily time frame. If we take a look at the ES Mini, what do we have out here? Well, we still have a Gartley sell pattern. Has not been invalidated. You'd need a close above 29.65, even Steven today, in order for that to happen. So far, that's just level of resistance on the daily time frame that has been tested and rejected. So its sell pattern is still in place as we speak right now. If we go take a look at the NQ, well, here is the tale of a different story. In this case here, you're going to see a 3 drive to a top pattern. If price closes over 93.45.50 today, and I don't know whether it will or it won't, but if it does, then it tells us that the 3 drive to a top pattern has been negated. There is no wave number 7 top out there. That was already negated with a move higher. And if there's a close above 93.45.50, where is price headed to? This is simple. 99.49.79 or 75 or 97.45.75. It's all-time swing point high. 93.45.50. That's the key level to be watching as the NQ closes out its session today at 5 p.m. Steve Rhodes with TFNN. You ready?
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Let's go back to that last screen out there. A little dyslexia never hurts. It means you can see things differently, but I was typing in things incorrectly out there. The 93.4550, that's the correct price to be watching at the end of the day for the NQ. If price does close above that, the bottom of the swing point, all-time high swing point, is 94.4975, and the high of that swing point is 97.4575 out there. Let's go to our first question. This one coming in from RP inside of the YouTube channel out there. Wants to take a look at the IYR, that is U.S. real estate ETF out here. We can see that prices, let's start from right to left. So we'll take a look at our monthly time frame. You can see price below the bottom of its monthly profile at 86.10. Price below the bottom of its weekly profile, which is 82.96. So not looking good there so far. And price right now is inside the daily profile. So just consolidating in between support and resistance out here. 71.68 is a support level, and 74.42 is your resistance area. Let's bring over Stevie's other charts. Let's take a look at any topping, bottoming patterns that we might see out here with regard to the IYR. What do we have out here? I really don't have much. There was an A to B equals CD pattern. I can draw this in a little bit. I can draw it in on my other background chart. So let's go take a look at that. So here was your Gartley sell pattern that formed out here. Your A point was down on the low from March 23rd. Your B point was the high out here on March 27th, the retracement. So the A to B equals CD, the market's going to do 75% of the work for you. You can see the one-to-one. Let me just expand this out here, RP. So here's what we can see. We can see a one-to-one, A to B equals CD. Now, the reason why this completed was because of the bearish reversal candle. And so had this bearish reversal candle not formed on the trading day of April 13th, that was your bear sash candle, we would not have called this a Gartley sell pattern. Now, all Gartley sell patterns have really 5 potential different outcomes. Let's go ahead and get rid of the A to B equals CD. And for those outcomes, 4 of them, we can use our retracement levels. So let's just simply go take a look at the retracements, and that's from the low to the high out here. Whoops, I've got the expansions on. So let's actually change this to the retracement levels. Give me a moment. That's going to be, suppose I've got that as default. So there we go. So let's take a look at the retracement levels. And so the first retracement level is going to be your 0.382 retracement. That occurred out here after that top on the trading day of April 21st. The second area is going to be the 0.618 area. That's at 65.38. Now, we can see the prices is moving higher, but we still have a series of lower highs out here and certainly lower lows. So at this stage, we're just simply going to consider this to be nothing more than a little bit of a counter trend move. Here's a little hammer candle on the trade day of May 15th. If you see it close below that low, which is 67.63, then that's going to tell us, well, hold on a second here. That is a hammer candle, isn't it? So perhaps that the IYR is set up much like the markets. We just took a look at an A to B or a Gartley sell pattern, but it looks like there might be a Gartley buy pattern, right? Stevie said there was a hammer there. So now let's go take a look at that. Let's go take a look at the A to B equals CD pattern to the downside out here. So here we're going to start. The A point's going to be that high on April the 9th. Your B point's going to be the low on April 21st. Let's mark that in. And then your C point was April 29th. Voila. There you go. So you have your 1, in this case here, 1 to 1.272, A to B equals CD to the downside. It was not the bar on the trading day of May 14th that gave you the signal of the Gartley buy pattern. It was the next day because that was the bullish reversal candle out here, that little hammer. So now we can say the same thing. All Gartley patterns have 5 different outcomes. Let's go see where we're at in the current outcome. Again, we're going to look at retracements. We're going from the high on the trading day of April 9th down to the low of May 14th. In this case here, price is made the 0.382 retracement. It is inside that daily profile. So RP, if you were going to ask me, where is it likely that price is going to head to next in the IYR, what would you say? What would be your price target? And you're exactly right. Your price target would be 74.42. That's the top of the daily profile to 74.89. That's the 0.618 retracement level. Now, that's what the daily time frame chart is doing. And the interesting thing here is the IYR looks like many of the indices and some of the other sectors inside of the S&P 500. Now, let's just so you've still got the which pattern is the one that is more relevant? They're both relevant. Right? They're both relevant. But which one is really more relevant out here? I would have to say we don't know. We won't know until either resistance gets taken out. So that's going to be the high of this session right here. Let me get my crosshair out here. We really don't know. The market's got to tell us. We don't know whether it's the Gartley sell, and that means the high of April 9th. If the high of April 9th gets taken out, we know that the Gartley sell pattern has failed. Likewise, we have the Gartley buy. And now we know that if the trading session, the low of May 15th gets taken out, well, then that would be bearish. That would tell us it's the Gartley sell that is the one that is running this show out here. The weekly time frame, does it help us out a whole lot? Well, it certainly tells us about the power of Stevie's red line. Now, this is the red and green squiggly line out here. It's the oscillator unchanged line. It is a key level of understanding support and resistance. Right now, what we've seen over the course of the last month is each time price has gotten up to that level, it has sold off. So 74.63 is going to be a real key level. That's what the price point is today. This number will change over time. But in essence, that is your IYR. And at this stage here, we're going to, because of the rejection of price on the weekly time frame, we're going to say it is the Gartley sell that is the pattern that has the priority. But really, we need the market to prove itself to us. So thanks for writing in. I hope that helps you out. I believe we had a request inside the Tiger's Den. Let me see if I can find it. Can I find it? VRTX. That was Dan in New York. So let's go take a look at VRTX. That is Vertex Pharmaceuticals out here. And let's try to figure out what it's doing. So it's trading above the top of its daily profile, the top of its weekly profile. Now, that's really bullish because a weekly profile formed 3 weeks ago with price being above that, and that is bullish. So it's maintained that bullishness out here. Price above all of the profiles. So everything looks hunky-dory. And let's go see if there's anything to be concerned about as we take a look at Vertex Pharmaceuticals. Now, on the weekly basis, this is going to be week number 8 of a potential TD9 count pattern out there. So that just says caution. Remember, that high can form on bars 8, 9, or the bar following 9. So it could be 2 weeks from now. You also happen to be in wave number 7. That is letter G. That can continue to extend itself as long as higher highs are made. But it does suggest a potential top forming soon. Maybe it's this week, maybe it's over the course of the next couple of weeks out there. If we take a look at the daily time frame, what do we have out here? Well, we've got wave number 7 that price is in. Looks like that's going to be confirmed, but not unless price closes below Stevie's green line. That's the squiggly line that you're looking at, and that price point is 283.17. 283.17 out here. So right now, all price is done. You've got a valid topping signal. Prices just simply push its way back to support. It's held, so therefore this is still bullish out here. That is on Vertex Pharmaceuticals. So where could it be that price is headed to? Well, for that, we need to go take a look at our A to B equals CD pattern out here. For this, we're going to take a look at the daily time frame. We're going to start back here at the low on the trading day of March 18th. That's going to be our A point. I'm going to use our B point out. There's a couple that we could use, but I'll use April 7th, and then I'll use the following day, April the 8th. Oh, this has not completed an A to B equals CD. So one price target, 310.48. The other one, let's see if I can do this quickly. Can I do this quickly? I think the answer is, hey, I got 14 seconds. Let's try it. Oh, come on, work here. Here's the bigger A to B equals CD for Vertex Pharmaceuticals, and that gets you up to 325.39. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're going back to the Vertex Pharmaceuticals chart. Didn't want to do that too fast for you. But there is a confirmed A to B equals CD pattern. I say confirmed because the B point, which is a trading session of April 23rd, that had a high of 277.80. Did volume there with 2.7 million shares. And yesterday, that was taken out with, I take that back. I thought it was 3 point. It was taken out with volume on the trading day of May 14th, 3 million shares out there. So the first target, 3.25. The second target, 347. I'd say the second target is more likely than the first one. That is on Vertex Pharmaceuticals. We've got a question from Pat S. Pat wants to take a look at the TD counts on the Qs on the daily and the weekly time frame. So on the daily time frame, today is going to be bar number 2, or should maybe bar number 2. Yes, it was bar number 1. Let's go change this to a weekly time frame chart for you. I believe we're in 5 or 6 on the weekly. Last week was 6, so this week would be 7. We know that a high can come on bars 8, 9, the bar following 9. So perhaps that is when the NQ tops out. Again, the earliest high would be next week, with this being bar number 7 for that pattern to come into fruition. When the NQ, or the Qs, on their weekly time frame did form their top, it was a bar following bar number 9. So there's your TD9s at work. Pat, I hope that helps you out. Thanks for writing in. Our next question, this one coming in from Alex. Alex writes in, hey, Steve, Alibaba closed above your price levels. Could this be a run up before earnings on Wednesday? Or is it real? So let's go take a look at Alibaba. BABA is the ticker symbol, and currently that is trading above resistance. So we'd set up resistance as the high from April 17th out there. So let's pull this chart back just a tad. That's because that was the bearish reversal candle. There was a higher high the following day, but that didn't work, or that didn't qualify as resistance out there. Was not a bearish reversal signal. So really the question that Alex is asking is this an A to B equals CD to the upside? Well, the volume from April 20th, that wasn't the resistance bar. That was the day following, and that is a swing point high. There was volume of 19.2 million shares, already 13 million shares so far. So what Alibaba could be signaling to you is a confirmed A to B equals CD to the upside. If so, that price projection, know that you're long out here. And so far it looks real volume-wise. The 1-to-1 would get you up to the 235 area, and the 1-to-1.272, 248. So yeah, look, the move today is real. It's taken out a prior swing point. It looks to be doing it with volume, as long as it closes above 216.10. Now, let me pull over my other chart here just to see, because I'm pretty sure that was the level that we were talking about. Well, yeah, it was the TD9 count pattern that identified the high out there. So, yeah, what do we know? Price pulled back to its breakout level, 192.70. It closed below that for one day and then back up above it. Think about that as a one of those blow up balls in your pool that you push lower. You try to hold it down there. If you can't hold it down there, well, then you've got a good grip. And if you don't, like in this case here, it tried to push it down. It didn't have a good grip because the very next trading session, it was right back above the breakout level. That was telling you there that the break to the downside was a false break. Now, you do have resistance, a TD9 count breakdown level, and that's going to be 228 even Steven. So, Alex, from an earnings standpoint, is today's move real? Yes. How is the market going to respond to earnings? I don't know. Your next resistance level, regardless of that A to B equals CD pattern that we drew in there, is at the 228 level. That's the daily time frame. The weekly time frame out here, let's go see what Alibaba is signaling to us. If anything, price pulled back to its breakout area in the 168.12 level. That was back in March. Never broke through that level. Price is trading right in the top of its weekly profile out here. Now, that profile may be different than what we were. Let me just see here. Is it? Nope, it's trading right up into it. So here's your stink, so to speak, Alex. Your message coming from the daily is that it's been able to blow through a swing point and do it with volume, suggesting it wants to move higher. We say 235, but we know that at 228, I believe it was the number, there's resistance. Well, guess what? There's resistance today, too, and that's because price is traded right into the weekly top of its profile, which is 219.96. Now, Tuesday is not the end of the week, so I don't know what this is going to look like at the end of the week. This is a bearish structured profile out there. So I don't know which one is right to you. What we can do is, we both can look at this, and you're an excellent trader and chart this out here. Just know that Alibaba on its weekly time frame is right up into resistance, which would make a lot of sense. It's pushed itself up as high as it can go before earnings, and then you're just going to have to wait and see out there. I hope that helps out. I wish I could give you more information than that. This is very much like the market. We take a look at Alibaba. We've really got the tale of two very different possibilities out here. Okay, let's go to our next question. Next question coming from Earl the Pearl. And Earl says, can the market move to a price lower than new highs to say the move back to March 23rd lower is not going to happen? Let me read this again slowly. Can the market move to a price lower than new highs to say the move back to March 23rd or lower is not going to happen? So, Earl, it depends upon the indice that we go ahead and use as our benchmark for that. So what do I mean? Well, first, let's take a look at that. In order for me to really answer Earl's question, one of the things that I need to do, one of the things I think we need to do as a group is understand the global flow of capital out here. Because this is the thing that is perhaps most important, most fundamental to what's going on inside the markets and the indices out here to help us answer that question. Now, this takes us back to the March 23rd lows. I believe the March 23rd lows out here, which have been 40 trading days. And what we're looking for here is to see is there a concentration of capital somewhere. And Earl, I would answer the question, if there was a concentration of capital in the U.S., then I would say, okay, that this is telling us, the global flow of capital is telling us that we don't need to go back to those March lows. So let's take a look at where we at. Well, right now the Dow is up about 32% since those March lows. And how about the UK? 27%. Well, that 5% isn't differential enough to say that capital is consolidating, aggregating inside the U.S. Let's take a look at Canada. Shoot, Canada is outperforming Canada is outperforming the U.S. It's up 38% since there. Take a look at China, 19%. India, 25%. Germany, 29%. You kind of get my picture here. International large, mid, and small cap, 24%. Emerging markets, 22%. Hong Kong, 17%. Mexico, 18% out here. And then you've got the laggards out there like gold, only up 11% since that time frame. The U.S. dollar index is down 3%. Treasury bonds are off about 0.5%. So there's no concentration of capital in those areas as much as people might like to think. But the point here, Earl, is there is no global flow of capital concentrating in any one market or area, at least none of the dozen plus. I must have 18 or so up here on my screen. So without that, to take away from the idea of going back to the lows out here, in other words, you're going to ask me to say, look, over the 130 years in history of these markets, when a major bottom is formed, this is by year out here. Where's my other chart? I don't know if I can do it in the next 10 seconds. So I won't do it in the next 10 seconds. We'll have to come back from the break, and I'll try to have my charts all set up for us to take a look at it. Right now, the global flow of capital is not concentrating in any one area out there, and that's what a market needs to really motor itself higher. We'll be right back.
Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we were taking a look at the global flow of capital before we went into that break out there. Now, the reason we're taking a look at that is the larger global flow, the capital flow. The trophy horse for them is the Dow. Now, I know that's not the sexy thing that maybe folks in the YouTube channel and the younger crowd is taking a look at. They're not focused on the Dow. That's my whole point out there. If you take a look at the S&P 500, basically that is U.S.-centric trading and investing. If we take a look at the Dow, that's your trophy horse investing. That's the big capital. That's where their fund. That's where the blue chips. That's where they're parking their cash. And then we can take a look at the Nasdaq. We'll kind of call that the retail. It doesn't mean that they don't have holdings in each of those, because you've got Microsoft is in all of those indices. You've got Apple and so forth. But the question that Earl was asking, Dan in New York, really asking the same question. You know, do I still have chart patterns and signals that suggest that the market is going to go back to March 23rd and bust through those lows? So let's just take a look at those. So understanding the lack of concentration of the global flow of capital tells you that what we see here going on worldwide is nothing more than just a counter-trend rally at this stage. Now, that may not be the case for the Nasdaq, so we have to break down each indice. But here, with regard to my historical data, I've got to use everything based upon the Dow. And in this case here, Dan from New York, Earl from the Pearl out here, if you go take a look at major bottoms in the way that they're formed, they happen to also coincide with lows in GDP. Is the low in the U.S. in GDP in the second quarter? Well, this is only through the first quarter out here. So is the second quarter going to be lower than the first quarter? Chances are it is. That's between now and June. So really, we're talking about another 6 weeks out there. Is it the third quarter? Is it the fourth quarter? Is it next year, the first quarter? I don't know the answer to that. So that's why we want to continue to observe and watch out here. But odds favor, based upon this one statistic, Dan, Earl, that the low inside the Dow is not in. I can't pull up my other chart only because I didn't have it loaded, but unemployment is the same way. If you take a look at major bottoms in the stock market, they will bottom when unemployment bottoms. Do you really believe, even though we're just coming back to work, so to speak, that we've bottomed in unemployment? Maybe you do believe that. I don't believe that. Not even close do I believe that, but I could be wrong. Okay, so now let's go take a look at, so we have those two data points. Now we've got 3 data points. No global flow of capital, no GDP bottom, no unemployment bottom, not just yet. So now we're sticking with the Dow. In this case here, I'm just going to pull over the Dow equity future contract. What do we have out here? We know that we've got really 2 patterns, much like we looked at, maybe it was Alibaba or IYR. I believe we've got 2 patterns, two patterns that offset each other. We've got the bullish pattern. That is the Gartley buy. That formed 4 days ago with the bull sash candle, an A to B equals CD to the downside. We've got the Gartley sell pattern, 24,792 out here. And if less price closes above that, that is a valid sell signal, Dan. That is a valid sell signal, Earl. And what happens if price closes above that? Well, it's going to run up to 26,138. That's its TD9 count breakdown level out there. But here's what I really want you guys to look at. Notice on my chart that I don't have a support level. I don't have a breakout support level on the daily time frame between where we're trading right now and those March lows. So if the market gets rocking and rolling, right, we began the show looking at the 30-minute time frame charts for the equity futures contracts. Now price will pull back to where it broke out. Well, we don't have that when we take a look at the daily time frame for the Dow out here. That's why those March 23rd area, the March 23rd area and lower is really game on. Now, let's take a look at the NASDAQ, because each market is going to be different. In the case of the NQ out here and in the ES Mini, we do have breakout levels. So granted, this 3 drive to a top pattern looks like it's going to be voided today. Let's just, for our assumption, let's assume that it's not. And you've got the 3 drive and the markets start taking off to the downside tomorrow. Well, if I asked you on this chart, where is the first level of support? Forget about the market profiles out here. Where is the level of support? You're going to come back and say, Steve-O, it's 75.35 out there. That's where support is. So to answer the question, Dan, about how about the NQ going back to March, that answer doesn't get resolved until we see price test the 75.35 area. If it closes below that for 2 sessions, then you could bet your sweet pippy that the answer would have been yes. But right now, we've got some new information. And on a market top, where is price going to pull back to? Well, we've got the 75.35 area. We don't have that inside the Dow, whether I put up the cash indice or the Dow equity future contract. Let's take a look at the Russell 2000. Do we have a breakout level? No. Do we have 2 patterns here? Yeah, we've got a Gartley sell. We got a 3 drive to a top. Price has to close above 1374 to negate that. We have a Gartley buy pattern that formed with that 3 river morning star. So again, we got the dual competing patterns out here. But if price closes below the bottom of that morning star, the session from 4 days ago, there's no other level of support here, and price will immediately get back in that March area and likely take out those lows. So let's finish this off with the S&P. We're doing the S&P via taking a look at the ES Mini. And so in the ES Mini, very much like the NQ, it does have a breakout level. Now, it's a Gartley sell pattern still in play. Price must close above 29.65 for this pattern to be negated. And then price would run up to 30.28. That's its breakdown area. And then we'd have to look for a new topping signal or pattern out here. Right now, the existing one is in play. You can see that on any pullback, any close below 27.66, you and I, we knew a few days ago as price was pushing lower into that bullish structured market profile that could be support. Strong. We knew it was strong support because it was a bullish structured profile. We know now that you see it close below 27.66. Certainly you see it for 2 days in a row. Where's price headed to? Dan, you can answer this question. You know it by looking at this chart. You know it's 24.8475 if that becomes the price target. So the charts will really answer that question to us on a pullback. We've really got a tug of war. We've got the 2 different analyses, so to speak. It just depends on the instrument that we're looking at. But what I'm looking at and what I believe is the most important thing, what you really want to see out here in a real bull market, and we will see it when it does start again, what we will see is we will see the Dow actually be the leader. And it'll be the leader globally. And we will see the global flow of capital. We will see when we start taking a look at the rate of change, we will see that it'll be the U.S. that dominates. Now, maybe it's not going to be parked in the U.S. Maybe the global flow of capital, and the reason why it isn't parked anywhere right now, is it keeps floating around saying, I don't like you, and I don't like you, and I don't like you, and it keeps looking for a place to park. And when it does, we'll see it. because we're just going to focus on the numbers. We're not going to focus on feelings or what we believe or anything else. We're just simply going to focus on the numbers. And if we do that, we're going to be A-OK. So I hope that helps you out. Maybe that was a long way to get there, but it was the only way that Stevie could get there. We've got a question here from Nick from Manchester. Wants to take a look at ticker symbol T out here. That is AT&T. And Nick's questions are: you're long a small position. Specifically, you're interested in support levels to add to your position. Well, support level would be today. You've got a brand new profile out here, daily profile, and therefore that support is at 28.73. Resistance is 29.85. Steve Rhodes with TFNN. We'll be right back.
Markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets. This is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of the sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. Today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we're going back to Nick's question, and he's looking to add to a position inside of AT&T. Ticker symbol is T. So here we can see the Gartley sell. It completed on the trading session of April 29th. The price target of the A to B was 32.13. This got up to a high of 31.87. That is close enough. We get the bearish reversal candle here, and we're seeing price pull back. So this is what I'd like you to do. I want you to hold off. There's a brand new profile, so you do have new support and resistance. Support 28.73. resistance 29.85 out there. And price right now is sitting right at the center. So now is not the time to add to that position. Actually, the time to add to this position would be if we see a close above the top of the daily profile. That's 29.85. I'm going to ask you to let this prove itself to you, James. I want you to take a look at these other daily profiles. The last time we saw a price close above the top of a profile was on the trading session of January 21st out there. The top of this profile is a significant area of resistance, and there won't be any kind of change in trend to the upside at a minimum until you see price close above that. So since you're already in a long position, you want to add to it, wait for the market to prove itself to you out here, James. So I hope that helps you out. The last question, this one coming in, is from Johnny, and he wants to take a look at XLU, looking to go long the XLU. And if we take a look at this may have formed a Gartley buy pattern as well. Again, all of these combined messages out. Here's our A point, the high of April 9th. Our B point is April 21st, and our C point is April 28th. And there's your 1-to-1 A to B equals CD pattern that completes, 1.272 that completes with a bullish reversal candle on the trading day of May 14th. So there is your Gartley buy pattern. And guess what? Today, you've got price trading above the top of a brand new profile, 56.29. So if you really got a hankering for going long the XAU, Johnny, well, you've got your signal today out here. I might want to do extra work on that to make sure, but you've got your buy signal as we speak right now. But that's the end of the show, folks. So thanks so much for being here. Everybody in YouTube, everybody in the den, everybody else that's watching us on Tiger TV in one way, shape, or form. Thanks so much for supporting us. Stay tuned. 2 more great hours are left. Got my favorite polar bear, David White. He's up next. Tom O'Brien after that, although I believe it's Larry Pescimento filling in for Tom. And Stevie's son, well, I'll be back with you on Wonderful Wednesday. Have a terrific Tuesday, folks.